South Africans should brace themselves for an even higher cost of living going forward. It's expected that Statistics South Africa will announce a higher inflation rate on the back of increasing oil, food and fuel prices. The Reserve Bank is also expected to announce another interest rate hike this Thursday.
It is widely expected that the Monetary Policy Committee of the Reserve Bank will raise the repo rate by 25 basis points. The Reserve Bank will likely note higher inflation projections as a result of the increasing fuel prices on the back of high oil prices. The price of petrol went up by 146 cents a litre this month, and it's expected to increase by a further 2 rands a litre next month. The geopolitical tension between Russia and Ukraine has caused supply pressures leading to higher oil prices. Possible supply shortages of wheat and fertilizer due to the conflict will also likely lead to higher inflation levels. At its January meeting, the Reserve Bank said it expected inflation to average 4.9% this year, but it will likely revise upwards its inflation forecast.
We expect the inflation rate to increase slightly to 5.9% from 5.7%. And the main drivers will be higher fuel prices and surveys of services such as insurance. The outlook for inflation, unfortunately, has changed since the last time due to the surge in global oil prices, and those will result in higher fuel prices. I mean, according to the Central Energy Fund, we're likely to get a petrol price increase of around 2 rand a litre, and diesel increasing by around 3 rand a litre. So those will keep inflation higher for long, and of course food price pressures due to the effects of the Russia-Ukraine conflict. So inflation is likely to remain sticky around the 6% level over the next few months, but we still expect it to ease during the second half of the year.
With the high inflation and interest rate hikes by central banks in developed economies, the Reserve Bank will also likely follow suit and increase the repo rate.
South Africa is expected to see its Monetary Policy Committee lift interest rates by 0.25 percentage point on the 24th of this month, and in fact hike interest rates by the same amount at every meeting this year. This follows on from the Reserve Bank in the United States, which hiked its interest rates by 25 basis points last night for the first time in its current interest rate cycle. South Africa, however, began hiking interest rates in November last year. In fact, with South Africa hiking at its March meeting this year, it's likely to be followed by an increase in May as well as in July, and of course in the last 2 meetings of the year, September and November as well. This is expected to bring South Africa's repo rate significantly higher, but not as high as markets currently forecast.
The increasing interest rates will mean higher borrowing costs. This is bad news for indebted consumers as installments on their debt will go higher. But for those with investments earning interest, there'll be more rewards. Gloria Sefakomosi, SABC News, Johannesburg.